Hi guys, welcome back to another video. In this video, we're going to be doing a daily analysis on ICP. I'm going to be talking to you about what I expect in the next sort of 24, 48 hours. We're going to be taking a broader look at Bitcoin and the total market cap chart. And at the end of the video, I've got two huge warning signs that you really need to pay attention to that could in fact bring an end to this bull market. So all that and more in this video, so make sure you watch to the end. Before we get in, if you haven't already, please do consider hitting that subscribe button and clicking the notification bell. Not joking, you guys, it really helps me out. I'm a new channel, so all these engagements, they really help other people find my content. So with that out of the way, let's jump in. So I'm going to start here with Bitcoin. I know this is more focused on ICP, this video, but honestly, what happens with Bitcoin is really going to determine what happens ICP here. So just let's do it quickly. Right, okay, so Bitcoin, let's start with the basics. We are still in an uptrend. We are above our EMA band on the weekly time frame. So technically speaking, from price action, the bull run is still intact. So I think it is important just to remember that. Now, there are warning signs, two of which on this chart. The first one is we are very overextended from our EMA band. And this EMA band basically acts like a magnet. Whenever price gets too far overextended from it, it comes back again and again. You see this throughout all the cycles. It always plays out like this. So just bear in mind, we are significantly above that. And that's currently falling at $80,000 to $73,000, right? So it would not be a pretty correction if that does end up playing out. You also have a bearish divergence here on the weekly time frame, right? So just be aware of that. These do take a little while to play out, and there's no way to know if this is going to play out immediately, because you can see in the last cycle you had this bearish divergence forming for a couple of months before it eventually resulted in a collapse. But just be aware that this is on the chart right now, and it is forming. So like this, in summary, on the weekly time frame, price action is still bullish, but there are some cracks. So really just exercise a little bit of caution and be open-minded to anyone on YouTube talking about bearish signals as well. Because look, guys, we all want the price to go up, but it's important just to have the bearish signals in your awareness so you can make better investing decisions, right? So if we, all in all, on the weekly time frame, price action looking good, but I say we are overextended from our EMA band and we have a bearish divergence on the RSI. So let's jump down to the daily. Okay, so we've had this pullback as a result of this bearish divergence that was forming on the daily time frame, which is currently still active, whereas we're making higher highs in the price and lower highs in the RSI. So you most commonly see a pullback or a correction when you see this, and obviously we're having a correction. So we had a pretty big jump this week in line with all of the macro markets, but yesterday we did find support at this level that we had marked out on our charts at around 93 to 90k, and you can see we have seen a strong bounce there. If we see this long wick to the downside, signifies strong buying pressure, so that's good. It's good that we have found support there. The RSI is at the midline, and oftentimes if you look on the chart, when the RSI hits the midline, it's usually a bit of a bouncing point, so hopefully that will be the case. What we don't want to see, the RSI breaking below this midline and maybe retesting it as resistance. And that would be quite negative and usually signals that there's further downside in store. But for the moment, that hasn't happened. We're holding above the midline. We're holding above support. So that does look good. If we go to the 4-hour, and this is as low as the time frame I will go. So yesterday, we briefly entered oversold territories, and as per my video yesterday, I told you the most likely outcome is that we would see at least a short-term bounce, which is what we're currently seeing right now. Now, whether this will continue or not, there is absolutely no way to tell on this chart, right? If we break above this EMA band at about 100k, that would be a good sign that we might look at targeting some of these higher levels. However, guys, if we lose this low here at 92 to 90k, that would be very negative. I'm not joking you, and would in fact open the door to potentially a further pullback to sort of basically your last level there is at 85k. If we lose that, then guys, you'd be looking at like 70. You'd be looking at that higher level pullback. So hopefully that doesn't happen. We are currently holding support right now, but if you want to set an alert on your chart there at $90,000, let's call it, do watch that level, because if we lose that, things will get very ugly. But for the moment, we're holding above this support level. We have found support. Our RSI has hit oversold territories very briefly, and we're currently seeing a bounce from that. But yeah, just please, guys, please keep an eye on that level, because if Bitcoin loses that, ICP will also suffer as well. Okay. And so for the overall crypto market, then if we go over to, this is the total three. So that's the total market cap excluding Ethereum and Bitcoin divided by Bitcoin. So this gives you the health of the sort of altcoin market in the relative strength against Bitcoin. And all in all, we've broken above our EMA band, and we're currently retesting that with a strong wick to the downside, which actually is good. It's positive. We're also got our RSI here above our middle band, which again is good. So all in all, this looks like that if this was an altcoin, I would probably take this trade right now, just from retesting that EMA band after a breakout and having our RSI above. So the overall altcoin market versus Bitcoin has pulled back significantly, but actually is holding support and looks like it could actually bounce from here, at least in the Bitcoin valuations. So I'm going to jump on to ICP now. If you haven't already, please do consider subscribing. Really, really helps me out, guys. Makes this content possible. Okay, so we've got ICP here on the weekly time frame. So I went over the weekly yesterday, so I won't go over it in too much detail today. But basically, nothing much has really changed here. You're still carrying out this major breakout from this RSI downsloping trend line that we had for most of this year. We're above our EMA band, and we are currently retesting our prior range high as support, and it is currently holding at support with this long wick to the downside. Our RSI is above the midline as well. So the weekly, in fact, is looking good. I don't see any real sign for concern here on the weekly time frame. But obviously, if we put that time frame a little bit smaller, it looks not quite as good. So let's take a look at this. Okay, so we broke down. I initially expected ICP to hold at this $10 level exactly. We did not. We actually went a little bit further down as far as $8.80. Now, from that level, I'm sure a lot of people got scared here and were selling their bags. But of course, the way the markets move, that was actually the local bottom here in the immediate short term. It got bought right up with this long lower wick to the downside, signifying that either this is going to be a local bottom or we're going to see price to stall around here. That would be the most likely outcome after seeing a long wick like this. We also are overextended below the EMA band, which is good because price should magnetize back to this EMA band, which is currently forming today at $11.70 to $12, in line with this downsloping trend line as well. But in the immediate short term, guys, we are in a daily downtrend since basically the month of December. Our RSI is also confirming that with a downtrend. The RSI is in fact below the midline as well, which obviously isn't good. So basically, guys, so long as we're below this trend line here, both in the RSI and the price decrease in price is actually the most probable outcome here. So just be aware of that. But as I said, this is in the smaller time frames where the daily and the hourly, the weekly itself still looks fine. So in terms of what we expect in the immediate short term here, we're on the 4-hour time frame here now. And you can see here, we had our oversold RSI yesterday, which I said the most likely outcome was a relief rally to the upside, which we have now seen. We deviated back above our monthly level, which I had marked out for you guys at $10, and we're currently retesting that now. So if we hold this level, right, we should be able to break out of this EMA band and potentially look at targeting that $12 area, which was our daily EMA band. However, guys, if we lose this monthly level and come back down here, that is the line in the sand, right? We need to hold $8.80. If we don't, I might even look at invalidating my trades, because really, as I told you repeatedly over the last few days, my invalidation for this trade is if we're on the 2-day time frame, if we see ICP break below the EMA band and reject it, that would be my signal to enter. So basically, if I see ICP losing this low and losing this trend line, honestly, you're going to be looking at more downside, guys. You'll be looking at more sort of, you'd be looking at that sort of 20 to 30% correction, which I don't want to be involved in myself. But of course, I'll keep you updated on that. So yeah, basically, the line in the sand there is $8.80. For this bull market. Now, should we hold that and should we break out of this EMA band on the 2-day time frame, then will still be targeting our target here of $150 to $250 per ICP, which would be absolutely fantastic. So before I leave the video, I want to walk you through two major warning signs that you really should be conscious of right now. First one is the US yield curve, 10-year and the 2-year yield curve has just uninverted, guys, which has historically been very, very negative for the markets. So if you look, basically this has done a great job of predicting recessions and global market wipeout crashes. So let's take a look at prior times this has happened. See, if we're looking at the red line here, when it uninverts, when it comes back above the red line, looking at prior times this happened. Last time was in 2007, just before the major crash in 2008. Time before that was in sort of 2000, late 2000, 2001, just before the huge dot-com bubble, another wipeout crash. Also happened again in the 90s, again resulted in a recession. So you can see there an inverted yield curve has predicted the past 7 recessions. So guys, this is now active and printed. Now the thing about this is it doesn't happen immediately. It can take some weeks or months to actually start affecting the markets. But yeah, this is a sign to be wary of, because you really do need to pay a lot of attention to this, because it actually is quite serious. I've got another one here which nobody is really talking about, and that is the Russell divided by M2, divided by the money supply. So the Russell 2000 is a US stock index, which Bitcoin is heavily correlated to. And I've just taken that chart and divided it by the money supply to give us this chart that no one else is really looking at here. And basically, right, when the price is at this higher level here, that usually marks market tops. So let's just go through some of these prior examples, right? March 2021. What do you remember what happened there? The summer crash in Bitcoin. Again, December 2021 marked a huge crash in Bitcoin. 2018 as well. You all remember the crypto bear market, I'm sure. And then the last time was 2007, just before the huge 2008 recession. And then again in the year 2000, just before the huge dot-com bubble. So these two warning signs are here on the charts, and you need to pay attention to them. The price is currently in this zone, well, close to it at least. So this could play out. Now, having said that, this can take anywhere from 58 days to 300 days. So it doesn't have to happen immediately. But basically what these charts are telling us is they're sort of contradictory to the actual price action, because the price action on both Bitcoin and the S&P is still bullish, both on the S&P and Bitcoin. But these two charts are telling us to be cautious, right? So for the moment, the trend is your friend. The markets are in an uptrend, and it looks like it's going to continue. But these charts are telling me to pay attention to any sort of warning signs I see on the charts, any sign of a potential breakdown in the charts, to treat that seriously, because these two signs, you do not want to get caught in one of those wipeout crashes. So I will be keeping you updated every step of the way on this channel. I hope you enjoyed that video. If you did, please do consider subscribing and hitting the notification bell, guys. It really does help me out. And look, you can always unsubscribe at a later time if you so wish to. But I'm going to leave the video there, and I hope you got some value from that. And I'll speak to you in the next one. Bye-bye.